On February 1st, 2026, Saudi Arabia made one of the most consequential financial decisions in its modern history. For the first time, international investors will be fully allowed to invest directly in the Saudi exchange. This is not just a market update, this is a structural shift for Saudi Arabia, for global capital flows, and for the future of emerging markets. In today's video, I will break down what exactly is changing on the 1st of February this year, why Saudi Arabia made this move now, what it means for global investors, and how could this reshape the future of Saudi economy over the next decade. So let's get started. Saudi Arabia has long been one of the most important international economies, but paradoxically, one of the least accessible. Despite being the largest in the Middle East and a key player in the international energy market, foreign participation in Saudi stock market has been historically limited. International exposure existed mainly through ETFs, swap agreements, and indirect institutional access. But full open participation, that was tightly controlled. This cautious approach was deliberate. Saudi Arabia prioritized financial stability, market maturity, and regulatory strength before opening its doors to the world. February 1st, 2026 marks the moment the kingdom decided it was ready. So what exactly happened? International investors are now permitted to invest directly in the Saudi exchange. Restrictions on foreign ownership across a wide range of listed companies have been eased. Market access rules have been streamlined to align with global standards. This move effectively integrates the Saudi exchange into the global capital ecosystem. Saudi Arabia is no longer just a regional market, it is positioning itself as a global financial destination. This decision did not happen overnight. It's the result of years of strategic planning under Vision 2030. Saudi Arabia's goals are clear: diversify the economy beyond oil, attract foreign capital, develop Riyadh into a global financial hub, and increase private sector participation. Opening the stock market achieves all of these at once. Foreign investment brings liquidity, price discovery, governance standards, and global credibility. In short, capital follows access, and Saudi Arabia just removed one of the biggest barriers. For international investors, this is a major opportunity. Saudi Arabia offers exposure to a fast-growing population, massive infrastructure projects, energy, petrochemicals, mining, and logistics, and rapidly expanding technology and consumer sectors. Unlike many emerging markets, Saudi Arabia has strong physical reserves, low government debt, a stable currency peg, and significant sovereign backing. This combination is rare and highly attractive to long-term investors. Let's talk about where the money is likely to go. First, financial services. Banks and insurance companies stand to benefit immediately from increased liquidity and foreign participation. Second, energy and industrials. Saudi Arabia remains an energy powerhouse, but now with deeper capital markets supporting expansion and diversification. Third, consumer and retail. A young population, rising incomes, and tourism growth are reshaping domestic demand. Fourth, technology and digital infrastructure. Fintech, data centers, cloud services, and AI initiatives are accelerating, backed by both public and private investment. These are not speculative themes, they are policy-driven growth priorities. Opening the market changes the exchange itself. We can expect higher daily trading volumes, greater analyst coverage, improved corporate transparency, and increased index inclusion globally. As foreign capital flows in, Saudi stocks become more efficiently priced, benefiting both local and international investors. This also raises the bar for listed companies, pushing governance, disclosure, and performance to global standards. Of course, no opportunity comes without risk. Foreign investors must consider market volatility during the transition phase, regulatory learning curves, sector concentration risks, and global macroeconomic conditions. For Saudi Arabia, the challenge will be managing capital inflows without overheating asset prices or increasing systemic risk. However, the kingdom has deliberately taken gradual, controlled approach, signaling long-term confidence rather than short-term speculation. This is not just about stocks. Opening the stock market reinforces Saudi Arabia's transformation from a resource based economy to an investment driven one. It strengthens capital market depth, private sector participation, job creation, and global economic integration. Over the next decade, this decision could be remembered as a turning point when Saudi Arabia firmly entered the ranks of globally investable markets. For investors, the key word is perspective. This is not a short term trade, it's a long term structural story. Those who understand the economic vision, regulatory direction, and demographic trends will be best positioned to benefit. And as always, due diligence matters. But ignoring this market entirely is no longer an option. February 1st, 2026 will likely be remembered as a landmark date in Saudi financial history. Saudi Arabia has opened its doors, and global capital is paying attention. If you found this analysis valuable, like the video, subscribe to the channel, and share your thoughts in the comments below. Thank you for watching.